I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Markets are bouncing back around the world. Traders are looking to see what Fed Chairman Ben Bernanke has to say today. And so far, markets are taking Cyprus news in stride. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning, which comes as a bit of a surprise given yesterday's weakness. And even Europe is up this morning. So are the markets telling us that we should not be so concerned with Cyprus?
Well, you have China up 2.5%. I think Japan's up again. And then you have the European markets up over 0.5% across the board. So if they're not worried about it over there, it feels like our futures market's telling us that we shouldn't really be worried about it.
Right. So with 3 down days now in the books, can we look at the level that's been holding in the S&P? Yeah,
because, the headline said, 3 down days, first 3 down days we've had, in weeks. But overall, the market's been contained and the downside's been somewhat contained. If you look at the chart here of the S&P, you will see that there are 2 different trends. This is the gradual trend that started from that November low. This has been holding during this entire rally, okay? But then you have accelerated trends. This is the accelerated trend that started 2013 that gave way right around the Italian elections. If you look here, 1530, we had a bit of corrective activity all the way down to about 1485. So, what is that, a 45-something handle pullback? And then we kind of, congested, saw some constructive action, reclaimed the 8 and 21 day, and went again above 1530. So now if you look where we are here, this is another accelerated trend line, and here's your 3-day pullback. Below the 8-day, but what we hold yesterday, we held the 21-day. So here's your new point of reference. This is 1538. I think we're opening close to yesterday's high. But so if we were to get above this 1557, I do think those who are really net short or have been cost averaging their shorts all the way up, they're going to get a bit worried. And if we close above this, then all of a sudden this 1563 doesn't look that far away. So the longer we stay above, this 1538 and go sideways, the higher the probability that this obstacle of 63 gets taken out on its way to all-time highs.
And we do have the Fed later this afternoon. While it's expected that the Fed will keep its monetary policy unchanged, what sort of impact do you think it may have on trading today?
I think people want to hear about the pace of purchase. How much will they be, buying? How long will they continue? The Fed language. I do think that the Fed is obviously going to stay accommodative. They're going to try and see all their good work, bear fruit. And at this point, with the headlines out there, with Cyprus and whatnot, I think they might say we're seeing encouraging signs in the economy, which we have been with the jobs and with housing numbers. So I think it's not going to be a game changer today. I don't think they're going to change things to derail, what they've been trying to put on track for the last few years already.
Well, while the damage may be contained in the S&P, there are momentum stocks out there that look to be showing some weakness. Take Netflix, for example, which has been range trading for a number of weeks now. Now is at the bottom of its range, just can't seem to find that momentum.
Yes, and at times there's momentum and at times there's sideways action. And last week we tried to get momentum as Netflix broke above, 185, 186. And then, once it broke back below that momentum level, then you take off a tier and then you let it, figure itself out. So now it's at a level where, is it just digesting or is it going to roll over? So this is a spot that we have to look for clues and opportunity. You look here, you will see, here's the big gap up after earnings. This was a momentum level that got taken out after this nice bull flag and we continued. Since then, it's been a bit choppy. I know that I listed this as a buy last week when it broke above 185-ish, went back to the highs but couldn't get through it, and now it's trickled back to the 21-day moving average. So if you're in this as a macro swing, I would say just be careful that if it does break below this 176 area, you could see a move back to bigger support, which is right here around the 50-day. So, know your time frame and just know that if this starts breaking down, it'll probably give us some clues that the market continues to be tired. But if all of a sudden it gets going again and breaks above, just say, yes, this area of like 187 again, it'll show that people are looking to put some risk back on.
And then take LinkedIn, which has been showing weakness since Friday. The 8-day has been putting pressure on the stock. Are there clues and opportunity to be found here?
Well, it shows you that entries and exits matter. This also has been in the same camp as Netflix, like an extreme momentum name. So when a little momentum leaves, guys get a little worried or upset, like kind of like me, because nobody likes to sit in pain. And if you look here, it's not that painful if you put it in perspective. This is the huge gap up that we saw after earnings. You had a quick beeline move up to 160, then it digested. And then this is what I'm talking about. This was, an add-on trade for momentum that held higher, right? And then went again, and then it looked like it needed to digest again. So we were looking to see if this could happen again up here, but it didn't. It went up. Then Goldman Sachs upgraded it, closed on the lows here, and this was a clue that it could be tired, get out of the way. And now it's holding some support, and the 21 days playing catch up. So at this point, it's still in digestive mode. It's had a huge run, but it's not as pent up as it was, during the course of this move, which just gives you a small sign that the composure of the market could be changing. As technicians and market participants, you just want to measure different aspects of the composure, but also keep it in perspective.
And we talked in a recent morning call about Amazon as a stock that looked like it was weakening, and selling pressure really picked up during yesterday's trading session. The stock broke the 100-day, closed down 5%. This marks the 4th down day in a row.
Right.
Is it just an avoid?
I've been avoiding it. I know that there was a decent trade like a week and a half ago, and then again, it showed a faulty signal. It tried to break out and couldn't. So if you're a momentum active guy, you get out of the way, and I think some people made money short there. I didn't short it. I just said, you know what, not for me right now. I should learn how to short more. So if you go to this chart here, you'll see on earnings, if you remember, it could not break above this 52-week high. And since then, it pulled back and then found support right here around this 255. This turned into a nice trade. When it broke above this small downtrend, it tried to hold higher right here, but then something happened when it tried to break out again to continue, it failed. And then on this day, it got downgraded. I know that's when my trader said, okay, momentum left, so it's a short candidate or an avoid, and look what we did all the way down to this support again. Yesterday, it broke below. It couldn't close below. It's a bit oversold. So I would say, if the futures are up, if it tries to bounce back, here's some resistance. Maybe you could play it bounce back to here, but if it gets rejected by these moving averages and turns lower again, that'll give us some signs that, this could see some lower prices as well.
All right, and Google saw a nice gap up yesterday after 5 down days, but another stock that just couldn't find momentum. It looks like it's trying to find support at the 21-day, but does it just look too shaky here?
I tried being long it, and I was just like, you know what, with this whole news and the way Google is like loose and wide and you can lose money pretty easily, I just backed away because I too made some adjustments over the course of the last few days because I wasn't sure, what type of pullback we would have, what this would lead to. So no reason not to, take some risk down. But overall, this has been a great stock. Great chart. My high beta name of 2012. It eclipsed the last year's high of 774. That triggered another move all the way to the high here of 844. And then look at this last level, broke, came down, trying to hold the 21-day. But if you look here, this is the first time it's touched the 21-day in all of 2013. So that's something a bit different. So you have to try it there. But then if it doesn't, I would say it doesn't reclaim this 820 soon, you could see some more downside. I might even want to test the 50. It did test the 50 here before earnings, and it does it rarely. But overall, maybe it's the curse of the $1,000 price tag. Maybe it just needs some digestive work because of the size of the move, and you can even go further back. Like, look where this thing's come from. So in perspective, not the biggest deal. So at this point, I think if you're trying to be long it versus 801, so you have like, what, a $10 risk for what could be, if these analysts are correct, taking out 844 on the road to, 900 plus.
Right, so on a macro level, it's still intact,
yeah.
Google.
It's a little bit more wishy-washy for shorter term guys.
Right. All right, well, coming up, we're going to go in the trenches with some charts that are flashing faulty signals. First, we have to take a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some charts that are flashing faulty signals. So let's start with oil. The OIH slipped 2.2% yesterday and broke below its 50-day. At this point, is it at risk of slipping down to its 100-day?
It seems like, and this group always has my number, or it seems to be lately. This has been a laggard group for most of 2013, and as the rally started to broaden out, I'm like, okay, where can money rotate? And every time that I've gone to this, it's been like a breakout failure, and I wind up getting stopped out. But I'd rather get stopped out than turn it into a bigger loss. And if you look here at the OIHs, you will see, right here, it looked like it was going to break out and join the rally. And what happened is you had somewhat of a breakout failure. Anytime a group tries to break out and fails, you get out of the way because it shows you it's not ready. So here it corrected, and then it looked like it was ready again. So this is when I got back in a few of the names in this group, a nice 2-day breakout, and then boom, failure. So at this point, I'm just going to avoid, and I think at this key moment, this could be a group that if we do go further down, could actually even see the 200-day, and this has not been a place to be.
And let's talk Schlumberger, which is, of course, the largest of the oil service stocks. It closed the day down over 3% yesterday. This marks 2 days of extreme selling. So is it too risky to short now at this point?
I think there could be continuation to the downside, and for me, this is the name that I went with. I'm like, Schlumberger, how could this hurt me? Halliburton, Schlumberger, refiners, let's go for it. So twice I got bitten also, so 3 times you better check the temperature of my head if I did it again. So anyway, here was that breakout. Okay, I remember being in it this day, and then all of a sudden it opened lower in an inside day. I'm like, that's not the way it's supposed to happen. You're supposed to, break out and continue. So I got stopped out right there as it failed. Okay, and then I said, I'm not touching this thing again. And then what happened? It got tight again. I'm like, you know what, Red Dog? It wasn't ready here. Maybe it'll be ready there. Had a nice day breakout on Thursday, gave you a little bit of follow through, so thank goodness we got day 2, so I sold some, and then lo and behold, you come in Monday, you have a gap down, so it engulfed this entire range, so it trapped a lot of people, and I just sold it and took my loss, thank goodness, because look what happened yesterday. So that's why if something faulty happens, you get out of the way, and now it's already at the 200-day. So it's showing extreme weakness, and I think that, I guess if you're a macro investor in Schlumberger, you're doing it because you have a thesis, but overall, this is, a weak stock in a weak group that doesn't deserve your attention right now.
Seems like oil was weighed down by uncertainty in Europe, so if the markets continue to shake off this Cyprus news, do you think we'll see them rebound?
It could happen. At this point, I think there are better, more clear-cut places to be. And if you can have a long list and a short list, oil and the refiners should be on the short list versus the long list.
Gotcha. All right. Well, let's check out some more charts showing us some faulty signals here, like Expedia, which met more sellers yesterday, retraced almost 3% back to its 100-day moving average. So could it find some support here, or will we see more selling pressure?
This is an example of the trend is your friend. This is a stock that's been trending higher, and it looks like for the first time it broke a portion of one of its upper trends. If you look here, you will see that you've had a trend intact starting from last summer, that every time we've come here, it's pretty much bounced off. So yesterday, with it being able to pierce through, that's a faulty signal for people that have been riding it. It's also now below the 8, the 21, and the 50. So for me, if you were in this trend, I would say this was your time to use a high-level stop. If you didn't, then maybe look to see if yesterday's low could be your stop, because overall, it could also correct down to the 200-day. It was looking good, looking like it can go, and then boom, 2 harsh days. So, this is something showing you that, if you want to look for something different, this is something different, this upper accelerated trend line. If you're a macro investor, you're sitting pretty. You might have had this for a long time and you won't, be upset about it. But maybe if you had a few extra tiers, you sell some because this is something a bit different. And who knows, maybe if it continues, some people could short it and you can get the test of the 200-day, which overall wouldn't be the end of the world. But for active guys, you don't need to deal with that kind of move.
All right, well, in yesterday's morning call, we talked about Bank of America as a best in breed in the financial sector. It opened at 2013 highs yesterday, but closed off of them. So how faulty is that signal? Is that a warning sign for us?
This really isn't as much of a warning sign. Stocks can't, go up, and they don't always close on their highs every day. This, I still think, has higher prices in the future. It just shows you that, if you want to use my method of trim and trail, it's always good to trim some into strength And sometimes if you trim too much, and I cry when I don't own enough as it continues, but sometimes it's also helpful where you have room to buy back. And with Bank of America, I don't count this as a faulty signal. I count this as just a stock that didn't close on the highs, that could be letting the 8 and the 21-day catch up. To me, this is best in breed, still looks good. Times to buy it right here, 995, right here on the bull flag. Again into support, and then when it held higher here, 12-ish or 1190, that was a good entry. And it's always good to sell some. So at this point, if it were to pull back to the 8-day and come into like 1240, I would probably be buying back some of the shares that I sold into 1280-ish yesterday as it was rallying a bit.
All right, well, let's do some quick hits here. Apple took a break yesterday after the nice rally. On Monday, the stock did close slightly down, but how constructive does it look at this point? Was that action anything to worry about?
I think yesterday it showed some commitment. Apple, after a few days in the past few months, just falls apart. Yesterday it held 448. You take a quick look at the chart. I would say if you're in it, here's your new point of reference. The longer it now stays above this 448.50, I think the higher the probability, it at least tries to test the 50-day, which is now 461.93. And if it takes back the 50-day, something it hasn't done for a long time, that would continue to show you that perhaps from these lower levels, it could be sustained for a move to the 200-day, which is around 535.
And yesterday, Goldman Sachs led the way down. The stock dropped 2%. Is more weakness in store?
With the futures up, it's probably up a little bit. That's probably the first thing that people are going to try and fade for positive to negative. I would watch yesterday's low. If Goldman were to take out yesterday's low and lose the 50-day, that would show you something different. That would probably tell you that there could be more weakness in the markets. Yesterday, some guys made money shorting this intermediate level. So now this is a bit bigger. This is something to watch today or tomorrow to see what the next direction is.
All right, this is one that's more sensitive to European debt crisis than other banks. So if everybody's shaking off Cyprus, maybe it won't be so bad today.
Exactly.
All right, and Facebook had some trouble yesterday, but managed to close in the green. Could it find more buyers today?
This one has been just slowly trickling lower. I'm still long some. If you want to take a quick look at the chart, if you want to trade it short term, you could trade it versus this 2678. It has the moving averages in front of them. For this stock to really start acting better, it's got a long way to go. It's got to get above this, what is this, almost 28 and change. So at this point, the pattern and the macro pattern, to me, still is intact, but it's just not ready. Maybe next quarter, because this quarter didn't perform, maybe it'll get some flows for performance purposes. But overall, this is still, trapped in this, descending channel, so to speak. So in order for it to get exciting, it's going to have to change. So right now, it could just be a hold. And if you want to use a stop, use, Monday's low as that level. All
right. And also yesterday, with fear back in the market, gold finished in the green. The GLD regained the support of its 8 and 21 day. But are you expecting today maybe not to do so well?
Well, I would say 155 is important. For gold to stay in the game, the GLD should stay above 155.
All right. So tell us what's on your radar as you head into trading today.
Well, Monday I came in with 9 longs and 1 short. Today I come in with only 6 longs and 1 short. I too made some adjustments because you never know what's going to happen. Yesterday you did have a quick flash short. I talked about it, 154.75 to put on some more of a hedge, or even I think I was net short intraday, which I wound up covering into bigger support. So it shows you there is intraday action that you can make cash flow besides having your positions to trade around them. So at this point, see what happens. Fed day, sometimes things change. Maybe they rally into the Fed and then the Fed comes out and they fade them hard. Or they hold in there and then I go back to 9 positions if it warrants it. But as of right now, I'm a little bit more neutral, a little bit more wait and see. I'm not wildly bullish or wildly bearish. I'm tactical on good longs and decent shorts.
All right, thanks so much, Scott. Happy trading, everyone. Have a great day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.